Hi, I'm Rich Daly, CEO of Broadridge Financial Solutions. I'm very pleased to share Broadridge's fiscal year 2011 results and highlights with you in video form. Overall, our financial results for fiscal year 2011 were disappointing due to the decline in event-driven revenues from their unprecedented high volume levels in fiscal year 2010 to their historical low volume levels in fiscal year 2011. The decline in event-driven revenues was primarily related to lower mutual fund proxy fee revenues, which declined from $150 million to $39 million between fiscal year 2010 and 2011. The decline in event-driven revenues masked our overall strong recurring revenue growth. In fiscal year 2011, Broadridge's revenues declined 2% to approximately $2.2 billion. However, recurring revenues were up 12% as a result of our successful acquisitions, the Penson Outsourcing Services Agreement, strong recurring revenue closed sales results, and internal growth. Net earnings from continuing operations decreased 24% in 2011 to $172 million due to the lower revenues and product mix. Closed sales for the year were $134 million. Our recurring revenue closed sales of $113 million were the second highest in our history and continue to create a higher recurring revenue base for future growth. While our recurring revenue closed sales were slightly lower than fiscal year 2010, we were still pleased with our sales results given the quality of the sales that occurred. Our securities processing segment sales increased 25% due to an increase in large transactions of greater than $5 million. We generated free cash flows of $143 million during fiscal year 2011. We used our cash to pay an annual dividend of 60 cents per share, which was an increase of 7% as compared to fiscal year 2010. This past August, our board again increased the annual dividend by 7% to 64 cents per share. This is the fourth consecutive year the board has increased our dividend payout. During the fiscal year, we also repurchased 8.7 million shares of our outstanding common stock and spent approximately $300 million on acquisitions. Fiscal year 2011 financial results were not reflective of the value creation progress that occurred during the year. I would like to highlight several of the reasons that I am so confident about Broadridge's future. First, and significantly, the New York Stock Exchange and SEC have never had a better understanding of the importance of what we do and the value we provide to the proxy process. We have clearly established that the free market for proxy fees is more than double the New York Stock Exchange and SEC regulated rates. In the registered proxy services market, we are directly servicing approximately 1,650 corporations. We launched the industry's first mobile proxy voting platform. We entered into an agreement with Charles Schwab to launch a new technology portal that will enhance sales reporting to Schwab's more than 600 mutual fund partners. We've closed our largest ever new securities processing solutions contract at the time of signing with a large international bank. Broadridge entered into another agreement with Charles Schwab, where Broadridge will provide the technology needed to support multi-currency and multi-country trade processing, accounting, and reporting. We acquired Matrix Financial Solutions, a leading independent provider of mutual fund processing solutions for the defined contribution market. We acquired New River, an industry leader in electronic investor disclosure solutions for mutual funds and annuities. we acquired Forefield, the foremost provider of real-time sales, education, and client communication solutions for financial institutions and their advisors. And finally, after our fiscal year end, we acquired Paladine Systems, a leading provider of buy-side technology solutions for the global investment management industry.